Welcome back to the Video CPA. Today we're going to be talking about the inflation adjustments that have come out from the IRS. They actually came out about a month ago, but we're going to talk about them, what the purpose is, and how they're going to impact your 2023 return, and what's been adjusted. And the IRS does this every year, so at the beginning of 2022, the return that we'll be filing pretty quick, they made inflation adjustments too, or also, and those adjustments unfortunately did not have the inflation adjusted as much as what's been taking place in 2023 because inflation hadn't been moving as much at that time. But so in 2023, for your tax return and for tax purposes, you're going to see inflation adjustments that are actually pretty good adjustments. So let's go ahead and look at them. We have the disclaimer here on links to affiliate marketers. I currently don't have any links right now, but and then we have our educational disclaimer saying, hey, we do our best to make this accurate, and as far as I know, we do make it accurate. But those are the disclaimers. So let's talk about the purpose of inflation adjustments. And when we see inflation, and I've done quite a few, I've done 2 or 3 videos lately on inflation, and when we see inflation going at the rate that it is right now, it does cut down on the amount of money we have because prices go up, and it also increases the amount of tax that we pay because sometimes our income goes up. So what the purpose of the inflation adjustments are supposed to do is offset that inflation increase that you might have, and so the tax burden is less for you. So inflation does inflate the money supply. It pushes the taxpayers into higher brackets sometimes, and so they try to do their best to offset some of these increases that inflation is causing, which is kind of a nice thing. It has a positive impact on your tax return, which is good. So it's really helpful sometimes to know what you're going to be looking at. So, but the result is that usually you'll pay less taxes because of an inflation adjustment than you would had those inflation adjustments not taken place. So let's go ahead and look at some of these inflation adjustments. You would imagine that with inflation going at about 8%, 7 or 8%, that these inflation adjustments would be about 7 or 8%. And these are some of the bigger adjustments that we've had in the last few years. So if you look at the maximum zero capital gains rate, for example, for married filing jointly, you can make almost $90,000 in capital gains, and there's no tax. So that's been raised about 7%. And all of this on the zero capital gains rate has gone up about 7%. The unearned income for kids subject to kiddie tax or taxpayers subject to kiddie tax has gone up 8.7%, so that's one of the higher increases. And you need to realize that is unearned income, so that's interest income that a child might make. So this has been risen. This could also be dividend income or something like that. If you adopt a child, that's gone up 7% as well, up to $15,950. So quite an adjustment there for adoption expenses, and those expenses can be very high. So let's look at the earned income credit. I don't have the percentages on how much these were raised, but you can see that, if you got 3 or more kids and you're filing jointly, you can make up to $63,000 and a little plus before and still get an earned income credit. So which is quite a good deal. And and the minimum threshold is $28,120. So this is a situation where it does help you sometimes to have some income, taxable income on your tax return. And a lot of people want to get it down to nothing and work their best to not have any taxable income. But if they do that, they don't get an earned income credit. So it's best to have some earned income on your tax return so that you can get an earned income credit. And you don't want to do that illegally or anything, but it is something that it does help you to have some income on your tax return. So anyway, those have been raised as well. The teacher classroom expense has been is still the same. The transportation fringe benefit has gone up just a little bit. And then the standard deduction itself. I mean, if you're married filing jointly, you get a standard deduction of $27,700 on your 2023 tax return, and you won't be filing that for a while, but pretty good raise there. Not quite what inflation has been, but we'll have to see what inflation is the rest of the year. And has had a household single, and all of them have gone up pretty good. That means that, you know, 27,700, a lot of people don't itemize anymore. A lot of people, and you remember, if itemizing, you're talking about mortgage interest and taxes, real estate taxes, charitable contributions. And so with 27,700 for every married couple, a lot of them don't have that much. And so, you know, you make a charitable deduction anymore, or a contribution, and you're not getting much of a write-off on that. Except, I mean, the IRS did allow some write-off to help charities, so you do get a minimal write-off for cash contributions now, in addition to filing with a standard deduction. So you need to be aware of that. And I talked about that last year in a video when that came out. So Section 179 limits, unless you've got a business, you're not affected by that. Sports utility vehicle you might be affected by, so you can get a pretty good deal for sport utility vehicles, actually. The annual gift exclusion has gone up to $17,000. For years it was $14,000, and it went up to $15,000, then $16,000, and now it's up to $17,000. So if you can actually give a gift of $17,000 to as many people as you want and not have to file a tax return. So you need to understand what that $17,000 means. I mean, you can give a gift of more than $17,000, and you're probably not going to have to pay tax unless it's in the millions of dollars. But you will have to file a gift tax return, or you're supposed to anyway. But under $17,000 or under, to as many people as you want, you don't have to file a gift tax return. If you're in a situation where you give $50,000 to somebody, then you're going to have to file a gift tax return. And there's no tax due on that gift tax return, but it does go against your lifetime exemption for estate taxes, which is, you know, almost $5 million or something. So most people still don't have a problem. But you fail to file a timely 1040, you're going to get a $485 penalty on that. So file on time, you know, even if you can't pay the tax, file on time. And that's the lesser of $485 or the tax on the return. Okay, so if your tax on your return is only $200, well, then that's what you'd pay in penalty. So be aware of that. Your retirement plans have all gone up as well for defined benefit plans, defined contribution plans. The IRAs have gone up a little bit, so you need to be aware of that. And the catch-up IRA has gone up a little bit. So these are some of them. There's not all. I mean, they've got a lot of inflation adjustments, but these are some of the more important ones. So just be aware going into 2023 that these are some of the adjustments that you'll have. Okay, and I've provided these so you can look back at them during the year. So that's it. If you haven't subscribed, please subscribe. And if you like this video, hit the like button. Appreciate it, and we'll see you again on the next video.